What's up, guys? This is Carter Thomas with Coin Mastery TV. Make sure you hit the subscribe button if you're not already, and hit that little notification bell to get notified of all the breaking videos as it happens in this wild world we live in. Today we're talking mostly about Litecoin and Ethereum. Talking about the market in general. We're going to talk about some SEC news about ICOs and about cryptocurrencies. And then we're going to talk about a few things regarding market sentiments, specifically how you can make better decisions and also use some of this as data points for what may happen in the future. Obviously, you can't predict the future, but you can use models to get some good ideas that can lead you down some thesis. So we're going to talk about a few different things, but really just an unbelievable 24 hours for anybody. And let's just all take our hats off for a second. And as much as we all want to hate on Coinbase for their support and for all their downtime, they are bringing in more people into crypto and making everybody who already owns Ethereum and Litecoin a lot of money. So, hey, thanks, guys. Great work. Keep it up. All right, so we're opening it up. We're looking at Bitcoin right here. You can see that Bitcoin is slowly bringing itself back after we had the futures volume. It's slowly creeping its way back up to a double top. Now, I'm not including this wick. So if you just look at this, we've got a couple more points to go, a couple hundred more, and we'll be right there. As it hits the double top, a lot can happen. Historically, it can blow through that. But as this week unfolds, as the futures markets unfolds, this will continue to be something to keep an eye on. Really good time if you were dollar cost averaging, depending on what your budget is, to increase the speed at which you dollar cost average. It's obviously not for everyone. Nothing I say is real financial advice. It's just my opinion. But I found that when the markets are this volatile and there seemingly has a huge demand curve, increasing the amount the number of times you buy can be a great hedge, right? You treat every 24 hours like you would treat a week previously. So we'll see. I think one thing that I noticed that some people notice, some people may not notice, it depends how closely you watch the order books. But if you go into, let's say GDAX or any of their Bitfinex or any of the trading books where you are actually watching the orders, which I can probably pull up right now actually, and just dive in here. If you go in here and look, and you can see, let me just scroll to the side so you guys can see or whatever. There's usually, you can see the order books happening. If you look at the 5-minute, there's often downtime on Coinbase or GDAX. Last night they did it for maintenance. This morning there was a bit of transaction backup. There must have been some sort of thing that got messed up. But whenever you see that sort of downtime, you're going to see a drop in price because the demand of the institution or the retail money, people who are actually going into Coinbase, logging in, going into GDAX and buying, is being capped. The reason why that matters is that this is always running on one of my computer screens, and I just have this up and running because what I do is I watch the status on Coinbase, or I watch the status on GDAX. I watch the sentiment on Twitter, Reddit, Telegram. I've just got like 9 chat rooms, and I'll see how the price is getting impacted in real time. And what you find is that when people lose access to the ability to buy more crypto, the price drops. When things go back online, it goes back up. What does that mean for you? It means what we've been talking about for the last couple of weeks. This price curve for Bitcoin and now Ethereum and Litecoin are both in the mix, which we'll talk about. This is 100%, in my opinion, I would say for the since the 5,800 dip, this is all just being driven by how much demand there is in the marketplace. There's nothing else. There's no other, in my mind, there's nothing else beyond a shadow of a doubt. Meaning there are just more and more people putting more and more money into this, and they're doing it through Bitcoin first. Now they're starting to do it through Litecoin, through Ethereum. That is what's driving this price up like crazy. Now, that may seem obvious to a lot of you, but what you realize is that if anything stops their ability to keep buying more, this price is going to start to come down naturally. There is some negative pressure on the price. It's just being overpowered by the ongoing demand. So for anybody out there, what I would tell you, let's just go back to the 1 hour on Bitcoin, is that a belief that the price is going to go up to 20, 25, 30, which it very well may, is not actually belief in the price of Bitcoin. It's more of a belief in the volume on the buy side. It's a belief that Coinbase, Coinbase and Gemini, really, the two huge fiat onboarding Kraken to a certain extent, but the big ones, Bitfinex, maybe not Bitfinex, but you get what I'm saying. It is a belief that growth is bigger than the natural sell pressure that's coming from people taking profits, coming from people that are thinking this is overvalued or whatever it may be. And that is just that's the name of the game, right? And if you want to see a proxy of it, the best way to gauge a proxy is to look at how much demand is coming from other sources. So if you go on CNBC, the website, I would say, is about 30 to 40% about cryptocurrency. You turn on the TV on CNBC, it's going to be 80 or 90% about Bitcoin, cryptocurrency. And yesterday was one of the biggest days ever for that content. They had interviews with Charlie Lee from Litecoin. They had Roger Ver from Bitcoin Cash. And they had tons of different experts. This is the name of the game. Watching this, how many times is it mentioned? Go to Google Trends. See how many people are getting in, right? Go and look up YouTubers. Look at their subscriber count. Look how many views they're getting. As long as it's still going up, this is going to keep going up. It's when the demand stops and the ability to buy more stops or slows down that you will see the dips, right? And that's just an important piece. I think you see a lot of people talking about how this is reminding a lot of people that were here in 2012, 2013, who saw the run up before the big crash of 2013 in Bitcoin. And the big crash came because of the Mt. Gox hack. But really what that did is just, it stopped people. Not only physically, they couldn't trade as much. I mean, there was like 60% of Bitcoin was being exchanged on that platform. But people lost faith, and so they didn't buy as much. That is what you should care about. The price is going to do what it does. Litecoin could easily keep going up as long as more and more people just keep buying in, or the people that are already in keep putting more money in. That's what it is. And it's kind of a weird, uncomfortable thought to think that this is just a big kind of pyramid, but that's how money works. That's how economies work. Litecoin, it's the same. It's the same deal, right? I think Charlie Lee was a big. He did a lot of interviews over the weekend. He did a big one on CNBC yesterday. He's been very active on Twitter, and he drove it. You'll also notice, I can tell you, that I'm getting more Coinbase sign-up emails than I've ever gotten before. Meaning, in the last 48 hours, I've seen more people sign up for Coinbase than ever. Mostly because of the media exposure. And that is driving it. So when people come into Coinbase, what's happening is that they're seeing the three options. See Bitcoin, which is trading at $17,000. They're seeing Ethereum, which was, let's say, 400 yesterday. And they see Litecoin, which was trading at, let's say, 150 or whatever it may be. And a vast majority of people use price as the determining factor. They don't know anything about Bitcoin, nor do they know anything about Ethereum or Litecoin, except that Litecoin is a lot cheaper than Bitcoin. That is a huge driver in this particular moment in time. Now, the story and the Bitcoin's silver and the Lightning Network and the tech and everything around it is why people may buy more, but price is driving it. If nothing else, it's one statement. It's cheaper than Bitcoin, period. And Coinbase is driving the ship in crypto, whether or not people like it or not. That is the place that is taking a vast majority of the new people. And the same thing is happening at Ethereum, right? I mean, it's not quite as expensive, or it's a little bit more expensive than Litecoin, but it's not as expensive as Bitcoin. And this is what's happening. And if you don't think that retail investors can do this kind of volume, I think you underestimate how many people are signing up for Coinbase right now. I think it's also, there is institutional money in this. Bankers watch CNBC. They read the Wall Street Journal. I mean, they are watching these places. This is where they get a lot of their news and information. They are not in Reddit and Twitter. Like, this is where they go. And if they see it starting to take off from the media, they'll go into the mix as well. So I think overall, the big thing to watch, the things that I'm noticing, are that I think we're still in a bull run, but it's not necessarily driven by anything other than the demand is so big because the media is so big right now. More and more people are learning about this. And that I back that up because you'll see next time GDAX or Coinbase, if you watch this stuff, next time they go down for maintenance, watch the price start to trickle down. And the arbitrage starts to go away. Once it goes back online, the price goes back up. It's really fascinating to watch. Along those same lines, I think that the next question is what's going to happen when Coinbase releases more coins, which they're going to do in 2018. No, I don't know exactly what coins they're going to release, but inevitably one or a couple of those coins will be very much cheaper than anything they have now. Right? If they released a coin that was less than $1, for example, it may seem like that's going to obviously get a lot of the purchasing power that Litecoin is getting right now. And there is a little bit of truth to that. But one thing to know is that as the number of choices increases, you get what's called the paradox of choice. We've talked about this before, where if you have too many choices, the decision process actually gets harder. And so if Coinbase ends up listing 10 coins and 3 of them are under $1, it doesn't mean that people are necessarily going to buy the cheap one because it's not the expensive one. What's going to happen is that they're going to start looking at it the way that many people who have been in this space look at altcoins now, which one thing you look at is price. I mean, if you looked at any coin on this list, you may say, oh, Steam's only $1.78 or Tron's only, 6/1000ths of a cent or $1 or Bytecoin. Like price is one thing, but what happens when you have a lot of choices is that instead of looking at price, you start to look at what the return is going to be. Do you see what I'm saying? When people log into Coinbase, after seeing all of this, after hearing about how this it's a predetermined inevitability that it's going up, when there's only 3 choices, it removes one part of the decision process. They know it's all going up, or they think it's all going up. So Litecoin becomes the obvious. When you introduce a lot more choices, the certainty of it all going up goes down. And so people have a harder time deciding because what they think about is what's going to be the one that goes big. And that is going to be the next iteration of all of this. May not happen. I mean, having it happen on Coinbase is obviously going to be a huge catalyst. But it's the same thing that happened in altcoins, is that as Litecoin, Ethereum, and even Bitcoin, as they start to smooth out, people will try to find this kind of returns in new places. And then they're going to move over to altcoins. And that may happen. It's just that's just how this has continued to evolve. And you're going to continue to see these pumps. So as you're watching this, if you are in the game of trying to predict the winners or whatever it may be, put yourself in the shoes of someone who just bought it. If you know people that just bought it, listen to what they're talking about. What kind of questions are they asking? When they get their first Binance or Bittrex account, what are they looking at? What sort of factors are they thinking about? And I can almost guarantee that they're probably going to go through the same process that many people went through in May of 2017, which is find a coin. There's a great story behind it. It's got a very good promising future, and that's where the money goes. So that's what's gonna happen next. I think Ethereum, Litecoin, and even Bitcoin all still have plenty of runway because this is the hottest news out there. That's not going to stop. But if you're trying to pick, if you're trying to gauge what's going to happen next, this is it. It's going to be less about the coins presenting. It's going to be more about which one's going to go huge. Marketing, branding, stories. That is going to be the biggest thing in 2018. All right, cryptocurrency, or the coin market cap. The name of the game, in my opinion, this market cap getting to $500 billion, which is pretty wild to think about. I mean, I remember when we broke 100 billion, and that was a huge deal. So really, really good stuff. And I think that this is really the name of the game, the Bitcoin dominance. And we're starting to see it come down a tiny bit. I think it drops. Let me see. Yeah, it was at 62 yesterday or two days ago. That's going to be a very big one, especially as these coins gain traction, as Coinbase starts to release new coins. So keep an eye on that. Keep an eye on Bitcoin's dominance. That may play a part in the price of Bitcoin. Very exciting. Other news, the SEC came out yesterday with a new statement on two things, on ICOs and just on crypto in general. I'll link this below. If you didn't read it, it says that ICOs actually aren't all that bad. It can be a very viable use case for some entrepreneurs, for companies, blah, blah, blah. But don't try, for the most part, they're going to be considered securities. Don't try to pull one over is kind of what they're saying. And then the second half of this is really a statement to investors where it says this is the kind of scrutiny you need to put these coins under before you put in any sort of money. So you kind of assume that this is going to be super sketchy and that it's going to, or not super sketchy, but that you got to really do your due diligence and all that sort of thing. They also had an interesting couple of paragraphs around crypto where they kind of conceded that these cryptocurrencies are really just it's unregulated. They haven't put it under the jurisdiction of the SEC, and I think they did this to let people know how unregulated this really is, how things can change so quickly as a protective measure. Coinbase did an email last weekend that said, make sure that you're investing wisely, and I think that's what SEC is trying to do here. But for the most part, these sort of statements are good news. This is legitimizing what's going on. And the more frameworks and rules and bylaws that we have, it's going to bring in more money. It's going to make people much more likely to put in more money. And for anybody who does put in money, you're going to be protected or have more protections on your side. Whether or not you agree or like that, that's your call. But for this to go mainstream, this is the kind of stuff that needs to happen. And the good news is they're trying to take a symbiotic pathway. They're trying to make it work for everybody, which is good. I'm going to meet up with a couple people that are building out some of the biggest ICO platforms in San Francisco, not only for accredited investors, but for just for anybody who wants to do kind of a crowd-funded ICO, really high-level platforms. And it'll be interesting to see how they react to this. In my opinion, this is good news. It's just trying to protect people. All right. Last two things. I thought this was really funny with Vitalik Buterin. If you guys, he founded one of the founders of Ethereum, and I think that this is really indicative of the crypto space in general. So he put a tweet out that said, "Right now, my favorite token model is the OMG style staking tokens for a few different reasons." And OMG, if you don't know, it's called Omise Go, and it's a company that's doing a lot with the banking and payment systems in Southeast Asia. And they have very good product, very good team, and Vitalik is famously an advisor with a sticker on his laptop and everything else. Now, if you've been following Vitalik, or if you follow him, or even just follow anybody, he has a very unique personality. He's very left brain. He's very rational, left cerebral. It's very literal. He writes this tweet, and understanding where he's coming from, this isn't necessarily a promotion of OMG as much as he's using that as an analogy or an example that people can look to understand where he's coming from. But if you look through the comments and then you look through Reddit, all the groups, a vast majority of people look at this and they're like, oh man, he's shilling OMG, he's pumping his own coin. Thank God, that guy never promotes anything. And so the audience takes it a very different way. And that's not necessarily what he meant. And that difference is really important. Charlie Lee kind of does this, but at least Charlie Lee he understands that he's got to do marketing, and he knows that the things he says do have a big impact, and he can't just say them as loosely as he might want to. Good example, yesterday he wrote a tweet that was like, Litecoin's going like crazy, but just to let you know, this is probably going to crash. He got a ton of heat for it, and then he covered his tracks by saying, hey, before that happens, let's go to the moon and get rich. And that is a huge part of crypto. That is a huge part of what drives pricing right now, is not necessarily what's happening, what's reality with what may be the best product. It's what do people believe is going to have the higher future price. And that's why a million people can see the same piece of information and draw 10,000 different conclusions on that. So for anybody who's following, not necessarily Vitalik, but anywhere you get information, you got to look at it through that lens. Who is this person? Where are they coming from? What are they really trying to say? And are they being misunderstood? And is there an impact that's coming from that statement or from that action that is getting lost in translation? Like a story of, or the game of telephone, where when you tell something to everybody in the circle, and by the time it gets back to you, it's a completely different story. That's what I see happening here. And the more that happens, you can just see, huge pump on the price because of this tweet. And that's not what he meant to do. The guy's got plenty of money. He does not need to pump tokens. So I thought that was really interesting. I think for anybody who's just getting in or anybody who's been in, you have to be really conscious of this, because prices can get inflated very quickly, or confusion can happen very quickly. Last thing I will say, I would say one of the I don't know. Yesterday I retweeted this. You guys may have seen this. CNBC did a loose interview with this guy a securities regulator, who said that people are taking out their mortgages to buy Bitcoin. Okay. Now that means people, if they have a house, let's say the house is worth $300,000, they go to the bank and they either get a home equity loan or a mortgage, and they'll get, let's say, $300,000 or however much cash, pay 3%, 4% on it, and then take that money and go put it into the market. And it was really interesting to see the comments, and I appreciate every comment. I think it's always tough, right? I believe everyone should make their own decisions. I also know that, sometimes there's incomplete information to make those decisions. When I say don't do this, it's not that you shouldn't necessarily go big on crypto or you shouldn't put a lot of money in, but realize that going into debt or trying to make money with credit is exactly what happened in 2008. That's what drove it. Now, obviously, that derivatives market was 100 times bigger than this is. But as soon as you get into debt and you are essentially gambling with that money, you are really, 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 really playing with fire. And that's just a tough position to be in. Everyone's in a different position. I know that certain people have different amounts of money. I know certain people are in different situations. But I can't stress this enough. That debt is one of the most lethal things to making good decisions. It is so hard to make a really good decision when you're trying to be aggressive with money that you do not have and that you cannot afford to lose. So I just wanted to clarify that, because it is what it is. I'm not here to be anyone's dad about this. It's just, it seems like I know how good this market seems, and I'm as bullish as anybody can possibly be on crypto. But you can still lose money in a bull market. And you lose money in a bull market because you make bad decisions. And if you are in massive amounts of debt or you're on big leverage, the chances of you making bad decisions are considerably higher. So we'll leave it at that. If you did take out a mortgage on your house and you're going in on crypto, I hope it works out spectacularly well for you. I truly do. I think that it's important to bring this stuff up, because I mean, this is not only the biggest bull run in the history of markets ever. Like, this has exceeded the tulip thing. This is the biggest ever, and we're at the very tip of it, and it may keep going way up, right? But it's just important to keep that in mind. I think that's you got to stay smart. I was talking to some people in a group saying how December is going to feel like it's the month to make a lot of money, when in reality December is the month not to lose any money. And then so we can just absolutely crush 2018. So very exciting times. My personal strategy right now, my buying strategy is I'm really focusing on the big ones right now. I think I'm really fascinated with this demand model, and then take some of the dollar cost averaging money, maybe move it over to some of my altcoins, but less is more. If I don't have a very confident position, I don't do anything. So thank you, everybody, for tuning in. Happy Tuesday. I will see you tomorrow. Peace out.